it's Angie Rupert, E2 visa attorney and founder of Rupert Law Group. We handle exclusively E2 and E1 visas, so no matter what treaty country you're from or in what state you want to be, we can help. Today, we have a very exciting guest. We're going to be talking with Vivian Geller, the mortgage lender at Pacific Trust Group in Los Angeles. And Vivian is going to give us some information about home loans, mortgages, things like that for people who are not U.S. citizens. So welcome, Vivian. Thanks so much for being here.
Thank you, Angie. It's nice to be here with you today.
Yeah. So today we're going to talk about, as mentioned, mortgages, lending, different things. This is a question we get a lot for people who actually do successfully get the E2 or E1 visa, end up moving to the United States, and of course want to buy real estate, which is the smart thing to do, by the way. So let's talk a little bit about that. I get this question. Of course, I have no idea what the answer is, but if I am an E2 visa holder, an E1 visa holder, not a U.S. citizen, not a green card holder, but living in the U.S., can I even get a loan to buy a house?
Yeah, well, the short answer is yes, you can. The long answer is you have to comply with Freddie Mac, Fannie Mae guidelines, national guidelines that basically outline requirements for you to get a loan. So with that said, some of these guidelines require 2 years tax returns, 2 years proof of income. So you can get an E2 visa, but you'll likely, especially if you're self-employed, have to wait until you have 2 years of filed tax returns in order to get a mortgage loan.
Okay, so let me back you up for just a second. So is there a difference if, and maybe not, but let's just say that with my E2 visa, I got an LLC, right? So I'm taxed as a Schedule C on an individual's tax return. Or if I open my company as a C Corp, separate entity, separate tax return, does that make any difference in the world of lending?
Well, in theory, you're going to have a 2-year history. So,
okay.
Yeah. So if you do have ownership in an S Corp, you would need to show that, you have a 2-year history of that ownership. And that LLC or corporation has filed tax returns for at least 2 years, especially if in theory you are the owner of the corporation. So it would be difficult to get around that unless you came here and got a salary job working for someone with a W-2, which doesn't typically apply to an E2 visa holder.
That's right. Although it may apply to the E2 visa holder's spouse. So the E2 visa holder must continue to work for only their business that they're approved for, but the spouse has the authorization to work anywhere without separate sponsorship. So that may be something interesting to note. So let's say that I have an E2 visa, my spouse is an E2 visa derivative and has the authorization to work anywhere, and he gets a job, whatever, as an administrator at a hospital. Mm-hmm. How long would we have to wait based on his W-2 salary in order to even come talk to you and have any chance that it's going to work out?
Sure. Well, the income, his income or her income as a salaried employee is immediate, and the banks will consider that income immediately. However, now we have the question of credit. Does that person have established credit? So in order to get a loan through Freddie Mac, Fannie Mae, you have to have established credit. Now, you can do that fairly quickly by opening up credit cards, buying a car, or there are many ways to do that. So I would encourage anyone who is here under an E2 visa or their spouse to start establishing credit as soon as they get here. Open up the credit cards. You can lease a car, you can finance a car. There are many different ways, but the credit does need to be established, and it takes a little bit. I would say probably, within 6 months to a year, you can have a decent score. So you typically need 3 credit lines. So I would take out a couple of credit cards, buy a car. These are just some of the ways to start establishing your credit.
Right. Interesting. Okay. So that may be something to consider, right? So for the E2 visa holder, they're going to start a brand new business. Great. But we may need 2 years worth of tax returns. But if the E2 visa holder is married and the spouse is able to get what we in the US call a W-2 job, meaning, they get paid every 2 weeks, they go to a place to do whatever work that it is that they're doing, that will be considered differently, and we may not have to wait that long. And if you already have credit in the US, you were here on another visa before, or you married someone that used to live in the US and actually has a credit history, you may be able to cut it pretty short. But even if you're brand new and have a W-2 job, definitely shorter than 2 years, maybe a year, right?
Sure. And keep in mind that W-2 job does need to be full-time. So you can't just work 10 hours a week and make that work. You'd have to have a full-time position.
So let's talk a little bit about numbers. Now, obviously, this is going to change and it's going to be different everywhere, presumably, depending on the cost of living, wherever it is that you're living, right? So you and I are in Los Angeles, one of the top 3 most expensive cities in this country. You could also move to Salina, Kansas, or what have you, a kind of a different thing. But for somebody who's moving to, let's just say a city, Miami, Houston, Phoenix, even Charleston, Raleigh, those types of places, what would be like, what kind of income, revenues, that kind of stuff are they looking for to even consider a loan?
Sure. Well, there's what's called a debt to income ratio, and they look at your overall debt, and they typically want and the debt would include a mortgage, insurance and taxes, credit card debt, car loans, student loans, anything that appears on your credit card. So they're typically looking to ensure that your total debt with the mortgage, taxes, and insurance doesn't exceed 50% of your income. So in theory, if you made $100,000 a year, they don't want the total debt to exceed $50,000 a year. Yeah.
Okay. Just a general guideline, right? Okay. Interesting. And so we talked about a few different things. Now, you've mentioned Fannie Mae and Freddie Mac a couple of times, and I know we could probably talk for several hours about exactly what that is, but can you give us what is that? People hear these terms. These are not people. We know that, but what are they?
Sure. Freddie Mac and Fannie Mae are basically government entities, and they lend money to all the banks. And then in turn, the banks lend money to people. So Freddie Mac, Fannie Mae have complete control over the guidelines around which they lend money. So they tell the banks, we're happy to lend money to your borrowers. However, we want them to follow these guidelines. And the guidelines vary depending on the loan amounts. And they're black and white, so they're very strict. There's no way of getting around it. So when you go to a bank to ask them for a loan, the bank is going to say, here's what we want to see. We want to see 2 years tax returns. We want to see bank statements. We want to see a lease current lease with your current landlord. And that's pretty much what they're going to have to see. There's really no flexibility in that. Freddie Mac, Fannie Mae are not flexible. There's flexibility in, down payment amounts, loan amounts, credit scores. Your credit score doesn't have to be perfect, but you will need to provide a fair amount of documentation for Freddie Mac and Fannie Mae via a bank. So the bank will basically underwrite the loan, show it to Freddie Mac, Fannie Mae, and then Freddie Mac, Fannie Mae will agree to buy that loan from the bank, and then you can actually get the loan.
So We talked a little bit about tax returns, right? Having being a business owner versus being a W-2 employee somewhere. But for the company, well, what if I'm a person who has an E-2 visa here in the US, but I've had a company in Canada for 10 years and that company still operates and it does really well. Does any of that count? Will they even consider that?
Well, if you're getting a traditional loan, meaning a traditional loan at a traditional bank, no, you won't be able to use those tax returns.
Okay.
There are other programs through private banks that might consider tax returns from Canada. Probably that's it, it would be very difficult. And the rates are typically higher, much higher at these private banks. But if you want the optimal rate through a traditional bank, you're going to have to just strictly stick with US income, US credit. You can use funds, down payment funds from another country. That's fine. You can source your down payment from the UK or any Canada or
France,
anywhere in
wherever.
America.
Yeah.
Although my suggestion is to keep things easy, I would forward the fund. If you're thinking about buying a house, I would forward the funds to the US and let them sit in your bank account for a couple of months, meaning let them season so that they're here.
Great.
And there won't be any question about use of those funds.
Oh, that's great. That's a really good tip. So, let's see. There's so many great questions here, but we talked a little bit about, okay, so the tax returns, the W-2 income, that type of thing, maybe a credit score. Anything else that people should be aware of that the banks will likely ask for?
Well, they're going to want to see, a history of their rental income for, approximately a year or so. Bank statements will go back, going back to that. They will look at the bank statements and they will look at all the deposits and withdrawals. So I would make sure that you keep those bank statements pretty clean. Don't show large cash deposits. The deposits need to be seasoned. So if you do have an unusual deposit, you're going to have to explain to the bank what it's for. And they may ask for around that.
Yeah, this is music to my ears because our first step for all E2 investors is source of funds. So anybody that's watching this that has been a client of ours, this is all they're used to keeping your bank records very tidy, organized, logical, that type of thing. Very important. And so it continues on. You thought you were done as soon as you got the E2. No, you are not done. Interesting. Now, are they going to ask for passports, green cards, things like that? Meaning, if you are here as a non-immigrant, which is the term that we use, it's a temporary visa, even though it can last for years and years and years, you do not kind of have a permanent residency here. Is that okay with the banks if these other things are met, these other requirements are met?
Sure. No, I mean, they will ask for ID. They will definitely ask for a copy of the visa, and they'll want to make sure that that visa is not going to expire within 90 days. So you would need to, make sure that you're applying for this loan in a timely fashion. They will likely ask for a copy of, a photo ID, whether it be a passport, probably the passport to match the visa. So
Perfect.
Will be necessary.
Okay, that sounds fantastic. And I think that we've covered actually quite a bit. Anything else that we should know, or that somebody who is an E2 visa holder should know about? Actually, let me back up. I do have a specific question. So you're here in LA. I'm in LA as well. Do these rules apply if I'm moving to another state, Texas, Florida, Hawaii, Maine, whatever? Are they all the same? Are they different per state? How does that work?
Sure. Well, the guidelines for getting a loan are the same because Freddie Mac and Fannie Mae are, basically government entities. They're national entities. So they're going to apply no matter what state you're in. The difference is every city has a different loan limit. So Los Angeles, which is an expensive city to live in, New York, San Francisco, they have higher loan limits than perhaps a city in Kansas or Wisconsin or Michigan. So depending on where you end up buying your house, the loan limits for Freddie Mac Fannie Mae loan will be stretched in certain cities. The loan limit for Los Angeles is $1,089,300, which is pretty high. And there's different tiers of loans. That's the high limit of what's called a conventional loan, a conventional Freddie Mac Fannie Mae loan. And then there's a lower tier in Los Angeles of $726,200. And basically loans at that amount or under have optimal interest rates. They get a little higher as you approach the $1,089,000 mark. But it varies city to city, depending on the cost of living in that city.
Okay, very interesting. So we talked a little bit about this, and I think I know the answer based on yours, but let's just clarify, because this is another question that I get sometimes. So let's just say I got an E-2 visa about 6 months ago. I'm not married, so it's just me. I own this business. If 6 months has gone by, so I filed one tax return, but it was only for a partial year, that kind of thing. But I sold a business in London for $2 million, and I moved that money over a year ago. It's there. So, but I want to buy a $3 million house. So I need $1 million loan. I have $2 million I can put down, but no tax returns. Can I get a loan?
No, I'm afraid not.
You're killing me.
Not a traditional loan. No.
Right.
They really are going to want to see that 2-year history, and not only a personal 2-year history, but a history for the business. So they're going to want to see 2 years of tax returns for that LLC or corporation, in addition to your personal tax returns.
Right. Wow. And so even if it's a C Corp, right? So those are separate entities. I file my tax return as Angie Rupert, and C Corp files a completely separate return as Angie's Inc. We need now both returns.
Yeah, if it's a C Corp, you will be able to get away without having to show that tax return. But if you're like the sole owner of that C Corp, then you're likely going to have to wait a 2-year period. They're going to want to see a 2-year history to accompany that E-2 visa.
Okay, wonderful. Well, I knew that answer, unfortunately, but I know that's a question because it only makes sense. I have so much money. Everything's going to be fine. They don't care. It's pretty strict on those types of requirements, as you've mentioned. So anything else that we should know about getting a mortgage as a non-resident, non-green card holder?
No, don't get discouraged. Start getting your credit right away. Bring over your funds, season those funds. Make sure that your finances are square, because they will look at the bank statements, and if there's anything unusual, you'll get called out on it. But if you're and can get your finances straight, get yourself a good accountant. That will really help. Then you'll be okay. It might take a couple years, but we have plenty of clients that reach out to us, and I explain to them what they're going to need, and then they call back 2 years later. It's amazing.
Ready to go. That's awesome. Thanks so much, Vivian. I really appreciate the info, and I know that our E-2 visa and E-1 visa holders do as well. So we're going to put Vivian's information at the end. Please feel free to reach out to her if you have questions about mortgages, and she would hopefully help you get one if you've been here for 2 years. Great. Thanks so much, Vivian. We really appreciate you today.
Thank you, Angie. Good luck to you guys.
Thank you.